Chairman, Vice Chairman CA Pankaj Shah sir, our today's eminent faculty for the webinar, CA Sarat Shah sir, office team and all the participants. I CA Pranab Apte, welcome you all to the webinar on TDS DCS compliances as applicable to the tax year 26-27. From 1st April 26, the new Income Tax Act 2025 is applicable, and our today's eminent faculty will be dealing with the compliances as far as TDS and TCS compliances are concerned for tax year 26-27. So before we move on to the technical session, I would request Vice Chairman CA Pankaj Shah sir to address the participants. Over to you, sir.
Very good evening. It is indeed a very timely seminar organized by our Direct Tax Committee under the chairmanship of Honorable C.V. Chitleji. Today, TDS, TCS is something which is the first aspect of the new Income Tax Act 2025, which has come into force. Earlier, every section was a code by itself, but now everything is in tabular form. So if we need to understand what will be covered in commission, we'll have to refer to the table and then refer to the interpretations, and under the interpretation, whether there is exemption or what is the meaning of the specific term. So things have changed a lot. TDS TCS is also very important because this involves the transition of both AY and TY. Let's take, for example, 31st March TDS, which is to be paid by 30th April. This will be paid for AY 26-27, and for April 26, which is to be paid by 7th May, it will be for TY 26-27. So these kind of interesting permutation, combination and practical issues will be faced, and for this we have eminent faculties today to discuss this thing in the month of April itself, so that our members face no problems. Friends, our Direct Tax Committee under the chairmanship of Honorable Chitleji will be carrying out multiple programs to ensure there is a proper unlearning, learning and relearning of the new Income Tax Act 2025. On behalf of Direct Tax Committee, I welcome all the participants and would like to thank the esteemed faculties for taking out time for sharing knowledge. Thank you so much. Welcome.
Very well said, sir. CA Pankaj Shah sir is Vice Chairman of Direct Tax Committee of ICAI. So I'll just briefly introduce him. He started with the address, but I'll just briefly introduce him. Uh, he has a proven track. He is a fellow chartered accountant and a proven record in the direct tax litigation and business restructuring. He holds multiple qualifications such as FCA, CS, BBA, LLB honors, and insolvency professional and registered valuer as well, which gives him a unique blend of financial, legal, and business acumen. He's the Central Council member at ICI. He has delivered over 1,000 technical seminars showcasing his excellent communication and presentation skills, which have helped him to establish himself as a renowned expert in this field. He has authored many articles in ICI Journal, AIFTP Journal, and he's an editor of ITJ magazine. So we welcome you, sir, also. Uh, Now we'll request Chandrasekhar Chittale sir to give his opening remarks. Before that, I would like to introduce Chittale sir. He's a FCA and the senior partner at CV Chittale and Company. He started his career as an article assistant with MP Chittale and Company, and on qualifying in 1984.
No, I think you just say I'm Chairman Direct Tax Committee. That's sufficient. No need to.
Okay, sir. Okay, sir. So we welcome Direct Tax Committee Chairman Chittale sir.
Sir, I'm the host. I have to welcome all.
Yes, sir. Over to you, sir.
Yeah. Thank you. Honorable Vice Chairman CA Pankaj Shah ji, Honorable Speaker Sharat Shah ji from Pune, Honorable Moderator Pranav Apte, Chairman Pune Branch, and all of you who are present for this particular webinar, I really welcome you. This is the first webinar, I believe, in the tax year 2026-27, organized by the Direct Tax Committee. As you are aware, for a number of years, we were waiting for simple income tax law. Of course, it is said that any law cannot be made simple unless you compromise with certain contents. Tax law being revenue generating law, if you try to simplify it, then it may become counterproductive for the purpose of augmenting revenue. As far as, and I had occasion to present before the committee maybe a decade ago when this direct tax code was in touch and the draft also was tabled, there I told that maybe in at that time across India there are around 6.5 crore taxpayers. Now they have become 8 crore. So out of them, for 6 crore, it is only salary and house property. That is the whole income tax act. Mainly they are the employee category. For the balance 50 lakh, maybe they need some other elucidation, and for which chartered accountants are sufficient. So there is no need of having simple law. And again, that can be appreciated, I told them, with reference to section 2, subsection clause 47, that is the definition of transfer. As we understand that transfer means sell, yes, that definition was that only. But then people had certain ideas about saving taxes by maybe converting capital asset into stock in trade, then maybe giving possession of the immoral property, enabling enjoyment but not executing conveyance. So if the conveyance is not executed, there is no sale. So all these the tax saving ideas which were acceptable in law, and the tax collection was suffering. Therefore, the taxman went on increasing the various limbs in the definition. So again, if you try to simplify, maybe once again the people will find some or the other loophole, and maybe the taxman will have to again revisit that loophole. So maybe there, and various lectures also you must have witnessed, which are then CVTT site. So what was informed to us is in this particular chapter, there were 16,583 words, which we have reduced to 13,600 words. So that is the only achievement as far as this particular thing is concerned. And while economizing on this particular words, they have also missed somewhere. So maybe the consultants will find out those miss and maybe try to capitalize on it. Again, the uh, amendment would be expected. Today, like in earlier era, we are 115 JJAA and such other clauses, ATC. Maybe today there is no suffix ABC, anything to the clauses, but I don't know whether it will remain 5 years down the line. But then, come what may, the law has been changed, and the first blush with the Income Tax Act 2026 is the deduction of tax at source. And therefore, it is but necessary that we should understand what is the change. And maybe it has been made extremely simple as far as these tables, then 100 interpretations, main definitions, etc. are concerned. So people find it very simple. And that's why we had to rope in the senior faculty like Sharad Shah, who is here for 4 decades. So he said that people are maybe ministry, CBDT, everybody is saying very simple, that maybe my fellow professionals are not sharing that particular view. So we said, Sharad bhai, you deliver a lecture. After you deliver a lecture, maybe it will become simple. Still, if this doesn't become simple, views we will communicate to the right officials to take cue of it. So anyway, if on 31st March, on 30th March, on 29th March, if somebody asked me that today, as Pankaj said, that what is TDS on commission, maybe I'll read section 194H and I will be able to answer. Today I have to read 393. Again, I have to search for the table. Again, below the table, I have to see if they say specified person. I will have to again check the interpretation, who is specified person. Again, if it says something, if interpretation it is not there, as a matter of abundant caution, I will have to also refer section 2 and then I will come to the conclusion. So friends, you will appreciate that this simplification, certainly it will bring assesses to your offices. Plus, as a chartered accountant, please don't forget pro bono services are not the welcome, because ultimately if you are exerting, if you are studying, you have to charge appropriately, because one thing which we are yet to learn, advocates have learned, doctors have learned, to charge appropriately. So maybe after this, you will understand the nitty-gritties of this TDS, TCS, and then you will be able to apply in mind. At DTC, we have also decided to come out with 3 small booklets as your companion. One is on salary, that is section 383 then 383 TDS TCS, and one is on procedures. So these 3 booklets maybe would try to be with you along with, because we cannot hold on. Sharad Bhai is very busy person. We are really thankful to him that he has spared his time. And whenever any difficulty comes in Pune and around, I think people definitely reckon to Sharad Bhai for the purpose of getting advice. And today he has, at short notice, agreed to contribute to this particular webinar. So I profoundly thank on behalf of Direct Tax Committee and on my own behalf, CA Sharad Shah for the purpose of honoring our invitation and actually remaining present at this particular webinar. Thank you.
Uh, Thank you, Chitra sir, for sharing various updates and your words of wisdom. Before we move on to the technical session, let me introduce our today's eminent faculty, CA Sharad Shah sir, who is a senior partner at Sharad Shah and Company. He is a fellow member of Institute of Chartered Accountants of India, as well as he has completed various certificate courses of IFRS, valuation, arbitration, and artificial intelligence as well. He has been the past convener of International Fiscal Association Pune. He is currently the treasurer of Honorable ITIT Pune Bar Association. He has a very vast experience of delivering the lectures at various forums, including he is a regular faculty at a direct taxation wing of Symbiosis Institute of International Business. He has addressed at various seminars on professional matters like income tax, transfer pricing, value-added tax, etc. He is a regular speaker at ICI as well as at WISN at center level also. He has been a contributor to the various ICI publications on faceless appeal before CIT appeals. He has wrote various articles in CTC, Tax Sutra, etc. So it's indeed our pleasure, sir, to have you on this webinar. And
Thank
over
you.
to you, sir, for the webinar.
Okay, thank you. I
Thank
mean,
you.
I must start with naturally the income tax department, PR department. That also I should thank. I should thank Direct Tax Committee, Shekharji, very personally. Pankajji, so nice of you to give me an opportunity. And naturally, after I'm really happy you have introduced so many good things. Shekhar has, I mean, I'm sorry for using the word Shekhar because that friendship still matters. I'm not able to go for the technical
No,
president chair committee. So I really, yes, talk so much good things about it. Many of them may not be absolutely true. I must accept where he has given a better introduction than what even I thought for myself.
sir, all those
But
attending are practicing in tax, they will interpret appropriately.
yeah. But really, at the outset, sincerely, I really appreciate the Direct Tax Committee, also Income Tax Department, for the direct, I mean, organizing this kind of program to make the people aware. Our professional colleague, as well as I believe this seminar is open for all. So whosoever is joining, and naturally, our traveling from 61 Act to 2025 Act, many of the things really needs unlearning and learning, which is say. But yes, whatever they have already been saying that 75% or more might be the same as what was hit, only it is in a different format, different numbering, different serial number. And still we have to do the biggest doing, undoing. Even when Sekharji was talking about, he directly traveled to the section 247 of 1961 Act. And yes, to remember the new provision number, yes, it is difficult to remember. And this is what even I find when I started preparing my presentation. I do find the issue of converting the serial number, I mean, converting the section number to the new section number or sub table number. So this is what is there. But still, this is really appreciable efforts, what you are trying. I am really proud that I am the first one to start the lecture on this particular issue, and that again, thanks go to the Direct Tax Committee and Sekharji. I really appreciate.
Only
Let
one,
me now,
only one
yes,
announcement I would make, that this particular event webinar is jointly with the Central Board of Direct Taxes and the Institute of Chartered Accountants of India. Usually
yes,
it is only DTC of ICI, but this is a joint event. The department is
great,
also participating. Thank you.
great. And there's a great effort by both. And if you see, when I must appreciate on the department side also, see, we in the past, I do not remember we started with FAQ anytime. Now, everywhere the FAQ and other things really come out from the department, making probably the life to interpret simpler. And that is appreciable. Yes, we chartered accountant will still find out something which Sekharji talked about. So that will continue to be there. We will again interpret or to reinterpret and things will happen. But yes, this is part of the good start. I know the FAQ, I'll always appreciate. I have that 96-page FAQ given on 31st March or 1st April. Really great way, resolves many things. And some of those abstracts I have used in my slides also. So let me go to my presentation. That will probably help me to streamline my thoughts. Is it visible?
Yes, sir. Yes, sir.
Technical team, am I okay with my presentation?
Yes, sir.
Okay. Thank you. So I'll start. Basically, this is on the TDS and TCS, and naturally, I think the Directors Committee also thought that the thing which we have to start with 26-27 financial year. Naturally, the first thing is always the TDS, because we have to immediately talk about payment to non-resident or other, and then the compliance. Also, the first compliance will come under this law, definitely about the TDS. So this is a good start with the first presentation on TDS, TCS. What I have really thought of my scope in this presentation, if you talk about if you talk about the entire TDS law, it takes at least 3 days to finish each of the section. But I restricted myself primary for those changes which have happened by the Finance Act 2025, Finance Act 2026, changes in section number by the Income Tax Act 2025, and I have also taken real big consideration of the FAQ given by CBDT, interplay and transition FAQ for authorized, that was authorized or published on 31st March or 1st of April. I got hold of it on 1st of April. Okay. As far as in these slides, when I say the changes really are over a period of 2 years. So primarily 2020 up to 2024, whatever provisions are there, they have not changed. I'm also not taking into my presentation. I'm taking only those important changes which have happened in last 2 years to start with, and I'll go to that. See, what are the changes? The biggest change basically is the scheme of TDS and TCS in the income tax act. We have been talking about 192, 194C, 194J, etc., etc. Now we have to unlearn that and learn. So what are the section now which we have to remember? 392 is the section for deduction from salary, including income, including payment of accumulated balances. 393 is the main section for entire other TDS provision, but those have been divided into different section or different tables. And major division I'll call about 393.1. There is serial number 1 to 8 in that table. These are for the payment to residents. 393.2, serial number 1 to 18, they are the payments to non-residents, which we generally talked about, more relevant for 195. The last 18th serial is more akin to section 195 of the old act. 393.3 for payment to any person, resident or non-resident. There are certain common area of payments where the deduction, whether resident or non-resident, we have to talk jointly. That is included in the table given under 393.3. There are 7 items in that. 393.4, 1 to 19, where TDS is not to be deducted. Very clearly a good table given by them where TDS is not deductible. 393.5 specifically, though 393.4 talks about TDS not deductible, 393.5 talks about tax not deductible in specific entity, which includes governments, RBI, exempt corporation established at the central act, and mutual funds, schedule 7. Those are the mutual fund where the TDS is not deductible. If I talk about the major changes in TDS, again I repeat, these are the major changes in last 2 years. After 2024-25, whatever changes are there, I have tried to cover if they are really important. The biggest change recent in the last finance bill, that is in February finance bill, which has come, no TDS on interest under motor vehicle accident claim. Second, no 10 necessary for individual and HUF payer for immovable property purchases from a non-resident. We were required to obtain 10 if the individual who otherwise may or may not be liable for anything other compliances of income tax. But because he was buying, most of the cases were like that, because he was buying a residential flat from a non-resident who is technically original Indian who has now become non-resident, and he is buying. He was required to go for 10 number of, he had to obtain 10 number, which is now not required. The third one, which has come in the last finance bill, finance act, labor contractor, they have clarified that will be covered by under the contract payment. The old section 194C. Why this confusion? Most of us have always interpreted that labor contractor is falling in this category only. He is a contractor who supplies the labor, and payment which we generally deduct 1 or 2% depending upon whether what is the kind of the pay, individual HUF or otherwise. NIL or lower TDS certificate process is to be digitized now. A good change they are talking about. We have to see basically, because even the application will have to be filed in digital form, that is more specifically faceless, and they will also process and give the certificate on faceless basis. There is no scope of intervening or going to the department, TDS department, to talk about, because this is the entire process will be centrally handled. That is what we have been promised. Another change which is there, which is the rather little problematic for us, rectification of TDS returns. Now time limit is only for 2 years. After 2 years, you cannot rectify. Up till now, we were rectifying for even 5 years, 6 years, and this rectification were of what kind? Sometimes the wrong pen number, some other issue, and we got a chance because we got the notices of for SSs. There is some demand of mismatch, and there is a demand on TDS account. We went for the correction. They allowed the correction, and we accordingly resolved the problem. This is still available, but only for 2 years, year after, not more than 2 years. Rent TDS is applicable if more than 50,000 a month, which was earlier originally 1,20,000, increased to 2,40,000, and now this is 6 lakh of rupees. No TDS on interest credited or paid to cooperative society engaged in banking, including cooperative land mortgage bank. This is only a correction of a probable miss out in the budget, earlier budget, where they missed out and they were not exempted from TDS. I mean, if you are giving the interest to this kind of banking channel, this was not exempt. So they brought it probably by way of a correction. We should understand that way. There are changes in threshold as compared to AY 24-25. I'm not discussing separately. There is a big list. I have also, I'm going to show you if possible, also read out also if it is possible, the time allowed, of all the section, what is the threshold and what is the rate of deduction. But not very sure whether we'll get that particular time available to us. Compared to TDS section, where many sections are there and many types of payments are there. If I talk about the title involved, TCS has bigger change, but they are really one way very good changes on the for the benefit of SSC. And those changes are what? No TCS on purchases. This has come in earlier finance bill, not in this finance act. Earlier, they actually 2024 they came up. That is no TCS on the purchases above 50 lakh. This provision, why it was necessary, or that this removal, why it was necessary, because there was also a provision of TCS as well as TDS. So then one who does first, you have to worry about whether TCS will be the first to be charged and paid by the seller directly to government, or TDS is to be deducted while making the payment to the supplier. and both of them were having practically the same liability. It was a mirror liability. It confused. The biggest confusion was even in Maharashtra, where we are dealing with. The biggest confusion was about the electricity bill, whether they should deduct, because many of the factory, naturally the amount involved was definitely more than 50 lakh of bill. But not only there, anywhere and everywhere. Who should do? TDS also is available, TCS is also available, and there was a provision, yes, if it is deducted or paid under one head, either TDS or TCS, the other side is not liable to pay. But still the confusion prevailed. The best part is that they have now removed that from the TCS. TDS continues. General rates of TCS brought down to 2% uniform, except an area of, we'll discuss a little more about LRS, but except that, most of all, they have now reduced or made the uniform rate. Reduction may not be a correct word. They have now made an uniform rate of 2%. Okay, but there are still some other rates. The item, the third bullet, which you can see on my screen, luxury item rate of TCS is to be at 1%. And they have given the list of luxury items. Some of them we are also, as an individual, I am surprised also, how can this happen? But yes, the list includes not only painting, list includes goggles, list includes coins, and the list includes artifacture. So if you see those luxury items where the TCS is at 1%, but these are very normal, you will not have to face this particular TCS, but yes, rarely you will find. And these are especially the TCS they want to cover, because according to the government and the circle, there was a lot of unaccounted case passing through in these luxury items, many of them painting, etc. So they thought of bringing it in the net of information. TCS primarily helps the government from bringing the information on record. So their database will have this kind of transaction, and that is because otherwise it is really, there was also an issue, and first time when the TCS came, the income tax act is on the income. What are the items in TCS? They are generally not income, and still there was a tax. So there was an issue whether it should be, but over a period we have accepted that TCS is also part of income tax, and they use this to gather the data. The bigger change, which was otherwise also when they brought the thing in the book for TCS, that LRS, we all know up to $250,000, I can transfer the money under LRS scheme. This is under FEMA, where I have to pay foreign exchange to the outside party. This place, there they have made certain changes, and ultimate effect of all the changes, which I will be talking in this next 4 bullets. LRS for education or medical, up to 10 lakh reduced to 0. Student going out and the parent paying under the LRS scheme out of their money, foreign currency, there will not be any TCS up to 10 lakh. About 10 lakh, the amount of the TCS will be at 2%. But there is also still an exemption possible separately. LRS for education financed by bank or a financial institution, as a loan to the person, then out of that money, you have to establish the link, but out of that money, if you are transferring under LRS to out of India, there will be no TCS. LRS for tour program reduced to 2% without any threshold. So there is no threshold. From day one, if you pass on even 1 rupee, yes, you have to deduct 2%, but the amount has now been reduced to or restricted to 2%. That is a bigger good change. Other LRS, over and about 10 lakh, it will be 20, up to 10 lakh will be 0%, and after over and about 10 lakh will be 20%. Let me explain you what is up to 10 lakh. 10 lakh will include all that under any other category like medical, education, tour program. That also will be counted for the purpose of 10 lakh. So if you are sending an LRS, you have no other head like medical remittance or anything, then first 10 lakh even under the general category will not be liable for TCS. But if you already used 10 lakh somewhere, or you have gone across 10 lakh somewhere in the earlier two category, then you will have to they will have to deduct 20% on the amount being remitted under the LRS scheme. I'm sorry. One major change, because from day one it is possible, according to what is my experience with the in this profession. On 1st of April, though it was probably a banking holiday or thereafter, requests might have come for payment to non-resident. What we call originally under section 195, what we call originally 15CA and CD. And that is why I thought this should be taken in the priority basis in my presentation. The problem is DTA benefit is to be given. Now the new format and the new rules talk about it is mandatory for you to obtain not only tax residence certificate, but online filing of form number 41. Earlier, what was there? 10F was there, but 10F specified that if the tax residency certificate doesn't give the required detail as prescribed in the rule, then only form 10F was necessary. If TRC really gave all the details, 10F was not mandatory. Now, even if everything is given, it is mandatory for the payee to online file form number 41, earlier 10F, you can say. So this is one of the basic necessity of DTA. We'll discuss thereafter a judgment which troubles again me on TRC. Okay, that we'll talk about. That is Tiger Global. But that is separate talk. When I come to that slide, I'll talk about. But the first important point is now a TRC is not enough. Even in the regular course, you'll have to go for Form 41 online. The above is not applicable if form number 145 Part D is being filed. Earlier 15CA Part D, that is where no tax is the tax is payable. Because there is no tax payable, so there is no point of TRC talk. If there was a tax, then I would have really compared the rate in DTA and I'll pay lower of the two. So there it is not necessary. However, teen of the payee, page, no, it's an error. However, teen of the payee is now mandatory, even in case of Form 145 Part D. But teen is something which you can compare with our pen. The person who is receiving money, there should be some identification like pen in that country. That pen, or let us call it teen for this purpose, takes identification number. That is now compulsory whenever you are paying to a party abroad. The procedure to file form number 41, where the non-resident beneficiary of pen is explained online. One good part is online, everything is now available. So whenever you want to comply with, yes, you meticulously read whatever is given on online, instructions given, and you will be able to even file form number 40. Form number 41 technically is to be filed by the payee. Naturally, those people generally talk about how to file, but because it is online available, instructions are also readily available, they should be able to file, and we have to insist that they file. Then only we can give 145, say 15 CB I am talking about. Okay. And possibly while in discussion like Sekharji, I might sometimes refer to the old section. Please bear with me. This is by habit all these years from 61 to today. I'm not 61. I started somewhere in 82. From 82 to today, we had been talking about those sections. So to change, I am finding it difficult. So will be, according to me, all of you. Now, I have really covered this the amendments in very brief. And I'm not covering the old section. We had many issues with 194R, or many other things, even in the ATJJA, how to work out. So those issues are there. So directly they were not troubling me on the TDS. But all those things I'm not discussing for the reason that we all have been practicing for years. It is possible that some of my listener here today, participant, could be new chartered accountant, but naturally that will require at least 3 days according to me. Each of the section, we require a discussion for minimum 1 hour to 2 hours or something. Some other section 194 or many of those things would require a bigger discussion. They have also come out with various interpretation circulars. All that we are there in the sense I'm talking about CBDT. So this is what I have not covered. So now I'm jumping to directly the procedure, because we have to, the moment we talk about we deduct the tax, we'll have to make the payment. Otherwise, if you see, even the schedule of payment, dates of payment, rate of course will be new as per the latest Finance Act or Act 2011, but otherwise there is no change whatsoever. But now when we are processing the payment, probably we'll have to take care of certain changes, and that I have covered in this presentation. Challan number 281 still remains, is continued to be used for both TDS and TCS. The basic change is Pankaj Shah told about. Yes, the basic change we'll have to learn writing down appropriately. If I'm making a payment for earlier year, probably I'll write assessment here. If I'm making a payment of TDS for this, I will have to write down 26, 27 tax year. And this one way, if it is to be manually written, I may have some difficulty, but I'll come to the detailed process from the website. Probably you'll find that the life has been made very easy by then. Okay. Payment codes, new numeric payment codes are there for 1001 to 1067. These are the numbers of codes which we have to talk about. We used to do 194C, we were writing 94C, 92. These were the code we were using when paying the TDS, if deducted under a particular section. Now they are talking about that you have to use 1001 to 1067. In the past, if they were going in the same quarterly return, we were able to adjust one challan where you have paid extra under one section and another place where you have paid short under that challan. So we were able to adjust. I do not know when we'll come to know when the things really start moving, whether that kind of adjustment they are going to allow us even now. Because we have only practically four types of return only of TDS, TCS. And those returns, if interchange is there of the challan amount, I wish they allow, but we'll come to know over a period. But they have at least talked about each of the TDS. They are talking about a special code for each kind of characterization, and how much will have to be very particular about it. I already told in the when I went through the various changes, we talked about 194C, including the manpower supply. This was according to them. I'll just small repetition. This was about there was an ambiguity whether it is a payment of commission, whether it is a payment of contract, whether it can be considered an any other characterization. Some of them took the advantage of 44 AD, some of them ADA. So all that to clarify, probably not this part of country I'm talking about, Pune and Maharashtra, but many other part, the interpretation was really talked about little differently. So to remove that ambiguity, they have now made a clarification in the act itself. It will be treated as equivalent to 194C, now new section 393(1). Before I go to the procedure, I thought of just refreshing about the TDS, TCS, particularly about decriminalization of certain offenses. We are always worried about those offenses and criminalization provision and prosecution or compounding of that prosecution. all were really be costly issue. Some of the items they have gone for decriminalization. In that, something related to TDS, TCS, and I want to remind you of that. TDS failure from lottery, crossword, or perquisite. Rigorous imprisonment. Originally was rigorous imprisonment of 3 months to 7 years. Now practically it have removed from the decriminalization. Penalty will of course continue. TDS online games, rigorous imprisonment of 3 to 7 years, excludes cases now only in kind. If that is, say, for example, the on game line, I get a gift of car, all that they are now excluded from the criminalization provision. It doesn't mean you are not responsible for TDS or paying interest, etc. But now prosecution will not be there. Okay. And some of them are graded up to 50 lakh, only 2 years, 10 to 50 lakh, 6 months of fine, uh, below 10 lakh, fine only, all that which has been which has been amended in the last finance act. TCS not deposited, there was a rigorous imprisonment of 3 months to 7 years, graded simple imprisonment. I mean, most of us, we do not know how big is the difference between the rigorous and the simple imprisonment, but there is what we have heard of how the things are different. Okay, again, the fine will be on the graded fine will be there. These are the three directly affecting the offenses relating to TDS or TCS. There are many other provisions for other offenses. And even we all know last year they amended the composition circular to reduce the compounding charge. So basically, for ease of business and ease of, I mean, for the benefit of SSC, there are many amendments when they decriminalize the things. Of course, pen compliance definitely remains one of the provision which I want you to remember. Part that under 1961 Act, where the pen provided to the deductor was invalid or did not belong to the deductor, the act, then it was deemed that the said deductee had not furnished the pen to the deductor. The above provision has not been explicitly enumerated under 2025 Act, but it is logical to conclude that such provision is implicit in the provisions of 397 2A. So though there was a clear provision there last 1961 Act, there is no such clear provision directly, but let us be very clear, PIN number has to be perfect of the payee, and you should ensure the best practice is to get the PIN number, PIN card copy, and go for it, go for filing the quarterly returns. You know, in 2025, 2024, non-filer deductive clause has now been removed. So in case of a non-filer, we have to go on the website of the department, and if he is listed in the non-filer, instead of deducting at a lower rate, the rate of TDS was 20%. It was too high, and many times it used to happen for even, it was affecting sometimes even the salary pay. You were not liable to file the return, and still they were falling this category sometimes. I have taken it in the first slide of the changes. I only just to explicitly talk about 397 3F now restricts the rectification of TD returns only for a period of 2 years. Effectively, no rectification can now be carried out up to FY 23-24. So any error up to FY 23-24 now is not rectifiable. Okay, this might affect for all demands, but I don't know, 119, all section 119, we can go to CBDT in a very large issue cases and try to get the relief if possible. But yes, they are now not keeping open the rectification after 2 years. Whatever extra procedure, probably we'll have to look at over a period when it comes to. Okay, now this slide onward, I'm trying to really go into the exact procedure, what challan, etc. are there, which will probably enlightened us that the things are not that difficult to remember, because you don't have to remember many things. Okay. So 281 continues. Payment codes to change for matching with new scheme. 1001 to 1067, those codes are there for the payment of chalan. Now one is to write tax year 26, 27. Now that I'll always remind for next couple of months. By that time, people will always be used to write down tax year 26, 27. It is like whenever the calendar year changed, we had to many times check. We were writing the old uh, year instead of the new year. Okay. So I have taken out certain screenshot, and then you realize how easy they have made the life. They are definitely trying, the department is definitely trying to ease out the method wherever possible. Now, when you select for payment of tax online, see, it gives you two choices, whether you want to pay under Income Tax Act 25 or whether you want to pay under Income Tax Act 1961. And the moment you click, the further screen will come before you accordingly. So this choice is given. So there were questions: how do we make the change? What about the payment of March 2026? Which way we'll pay? Those questions were there. They also answered in the FAQ, which I'll read out all those FAQ relating to TCS, TDS. Probably there also they have clarified. But if you see the screenshot, the thing is very simple. You have to choose one of the two possible year, either think under 2025 or 1960. The moment you choose, see, in this case, the first three slides are on the basis of choosing 1961. So now see the next slide. Next slide, it automatically gives me assessment year only. So I have to click in the drop down box which assessment year it relates to. Probably 26, 27. If it is now, we are talking about the pending TDS, then pay TDS, the section they have referred to 192. Those are all sections that read more, talks about each of the sections. So you have to go accordingly, then proceed, pay fee wherever the fee is payable because of some delay or appeal fee or anything, then you use that, and miscellaneous receipt when some other requirement is there for it. Afterward, when you go further, again, it gives the section and the description, characterization of the payment, and there you really get directly a relief. I don't have to even many times remember which section, of course, which section is to which season. Yet, of course, we know the characterization, we know. We have to just click the particular head and you will get the answer. So the life is really easy when you really try to make the payment online for this challenge. Now, I have taken the slide when he talk about Income Tax Act 2025. Oh, those 194 and 192 and everything will now go away. So go to the dashboard, continue that. You choose that 25 and now you go, now see the section which are referred to here. Section 392, 393, 1, 392, 2, 393, 3, like that it is there. And like 194, whatever was written in this particular slide, similar way, you will get the screen for each of the table item separately. After you tick this, you go proceed. The moment you proceed, you click proceed over here, and you will get that entire list. You have to click the particular item characterization, and your challenge will be ready with the code number. Of course, the old things still continue. Those text applicable major head, minor head, this will all continue. Even select the residential status of the deductee, whether it is a resident or non-resident. This, of course, continues. We talked about, but from there I am now going. How they have made the codification system, very logical codification system. And what is there? So 392 TDS from salary and accumulated balances, there are 4 codes. For salary from government employee, 1001, salary from private sector employment, 1,002 Indian government employees, 1,003 union government. So this is for Indian government, this is other than union. First is 1,001 is for other than Indian government, 1,003 is for union government employee. 1,004 is for that EPF withdrawal accumulated balance where the tax is liable to be deducted. There are this detail I have given for salary. I am not going to give you that big detail. So it is there in the Excel sheet which we have prepared, and I'll try to pass it on to that. But how it is now, our prime salaries is for 392, and all other TDS are under section 393 in the tabular form, as Sekharji talked about. It all very Sasab and Sekharji both probably talked about. So tabular presentation is there in the Income Tax Act, where the rates and the provision and the character and everything is given in table. There are 5 tables, 4 directly relating, 3 relating to TDS, 1 relating to TCS, and something further relating to exempt items. So which now 393(1) payment to resident. That is from 1,005 to 1,038, where what are the kind of things which come? Commission, rent, property, investment, income, interest, professional fees, dividends, and miscellaneous payment. Okay. These are the items listed in that particular table 1 of 393. Key change are the 194J is now in 2 codes. Old section 194J has been split. Code 1026 at 2% covers technical fees, royalty, etc. 10% of 1027 and 1028 at 10%. Using 1026 where 1027 applies is an under deduction. So this is what probably you'll have to take care. But now these also talk about if it is to be treated under deduction, so they are going to really harp upon using the correct code number. And this is somewhere where we'll have to take care of it. Now, table number 2, 393.2, section 393, subsection 2, or you call it table number 2, that is for payment to non-resident exclusively. And their codes are 1039 to 1057. These codes are drawn from Form 144, which you will find again when you are passing the, that 144 is equal to the Form 27Q, and cover all TDS application on payment to non-resident, from sportsmen, entertainers to infrastructure debt fund. All those details are there. Everything, every characterization has a different code, and we'll have to talk about that. Code then next is not the codes 1058 to 1067, any person codes, and code 1004 EPF withdrawal also appear in Form 144 where the payee is a non-resident. We have to even those non-residents. So if you go back to what we have told, I have told literally, there is first table is for payment to resident. Then table 2 is specifically to certain items to non-resident, and there can be common items which are applicable for both resident as well as non-resident. That goes in table number 3. There any person covers both resident and non. It's a duplicate slide in that. Okay. 394 is TCS, section 394 TCS codes. Codes are from 1068 to 1092. All the tax collected and source provisions are now under section 394, replacing old section 206C. These codes appear in Form 143, the new quarterly TCS return. The biggest change from 1961 Act, TCS on luxury goods has been significantly expanded. There are 7 different characterization, one for painting, one for Google, one for music system, one for stamp and other collectors. So all these are there. Even the wristwatch, these are all different characterization. There's a different code, and we have to deduct only the one common part is this luxury item. The TCS rate is 1%. code 1070 185 cover luxury that had no equivalent in the old act. These are entirely new TCS obligation introduced by Income Tax Act 2025. Sellers of art collectible, they will have to really remember. Okay. Final threshold will be notified by CBDT. That was when I was preparing the file. Now they have talked about final threshold is 10 lakh rupees. So each of these luxury item at a time, the value exceeds 10 lakh, transaction value exceeds 10 lakh, TCS will be applicable. Now I have taken the subject of mapping the old forms with the new forms and the compliance requirements. So let me go to that slide. Declaration. We have been always very conversant with old forms. रात को भी बोला 15G 15H किया तो we were able to talk about it. Now we'll have to remember the new, that unlearning the old form number, learning the new form number, what we have been talked in the introduction speech. So declaration to avoid TDS 15G and 15H. Now they have been combined in form 121 and will have to submit by department by next 7th, whichever I receive in that particular month. Employee investment and HRA declaration. 12BB was the form original, now form 124. TDS certificate for salary now is going to be 130. Years together, we were always talking about form 16 and 16A for the TDS certificate. Now we'll have to remember for salary certificate form 130 and for other TDS non-salary certificate 131. Annual tax statement 26AS, it will be now form 168. TCS certificate to be given, which was going was 27D form, now form 133. TDS certificate 16A 131 is a repetition of item of the quarterly TDS return form 26Q. Now it will be 140. Salary non-resident also will be 140. TDS on property, rent and VDA, it will be 141. Quarterly TDS return of non-resident will be 144. Foreign remittance certificate 15CA. We are used to 15CA and CB. Now we have to call it form 145 and form 146. I have also given in each column by which date it is you have to comply with. The deductor to submit first was 7th. In case of form 16, on or before 15th June of a FY following the year in which TDS was paid, and upload within 90 days from the end of the month in which information is received. Within 15 days, the form the other 131, within 15 days from the due date of furnishing quarterly statement, within the form 133, 15 days, the next also is 15 days. Quarterly return June, September, December, 31st day of succeeding month, and the quarterly return for March on or before 31st May. This applies to everywhere. Is there a change? Yes, probably. Though there is absolutely no change. You and I, the dates are same. Numbers have only changed, except the codification which they talk about, characterization of various items. That, of course, is something which we'll have to learn. Otherwise, there is no change whatsoever in the system. Even 15CA is supposed to be before making the remittance. CB naturally even should precede, because many times if 15CA needs 15CB to be incorporated, that was first and then 15CA was submitted. Statement of perquisite 12BA, now form 123. Relief for salary areas, that was 10E, in which we had to apply under section 89, now form 39. Foreign tax credit, form 67, now form 44. And we all know FTC claim, there is lot many litigation. We will have to be particular about this form. Application for lower TDS online, that I have not written the compliance return, Form 128, certificate about payment tax by payee in case of failure to deduct TDS, Form 149. Let me talk a little more about this. 149, I mean, whenever the deductor fails to deduct or fails to pay, he suffers a disallowance under apart from the interest and penalty for non-compliance, where he is considered to be assessing default. He also, that disallowance also was one of the big penalty by itself. There was a remedy, and that remedy continues only slightly with more details. The remedy continues. You obtain a certificate from a person, chartered accountant, who knows the pay or who can verify the pay's record that he has included this income in his profit and loss account, and then he has paid appropriate tax, he has filed the return, and this certificate you obtain and give to the deductor. Then deductor will not be considered to be assessing default. He also will have an advantage of allowance of that, depending upon when the certificate is produced. It could be in the same year, it could be otherwise in the subsequent year when the certificate is produced. This certificate continues. The only thing the certificate details now in 149, the details have been increased, and I have reproduced serial number, I mean, the requirement at 3 to 9 ABC, which is there in the form. And some of them are really difficult for us to verify, but we'll have to do if the benefit is required to be obtained for the deductor. Deductor default, as a chartered accountant, we may have to help him out. Now, I'll read out all those particular line items. Amount of taxable income on which tax has not been deducted in whole or in part. Now, mind well, this is of the pay. It is not for one particular deductor who has failed. Here I have to go for entire thing. Amount of taxable income, including the amount of income on which tax has not been deducted in whole or any part. This is another line item. Then total taxable income. Tax due on serial number 3, tax due on serial number 4. Total tax due on the income return of income. Head of income under which the receipt is accounted for. Gross receipt under the head of income under which the receipt is accounted for. And amount of taxable income under the head of income under which the receipt is accounted for. Now, does this 3 line, what I need is though it is included in profit and loss account and under the finance the requirement, finance disclosure requirement, I might have included either in the sales or other income or whatever is there. I might be offering even the other income which is there in the profit and loss account might be offering under the head business income. Then I have to talk about it is part of the business income. It is also possible that it might not be under the business income. It is being accounted, it is being disclosed in the return of pay under other head of income. In such case, I have to talk about that. And see, not only that, my income, I mean, the deductor where the deductor has failed, it is the total, the last amount of taxable income under the head of income under which the receipt is accounted for. If I have a capital gain, entire capital gain amount, whether from the defaulter or whether from others, I'll have to really certify it. When I give this certificate, so we do find the resistance in getting this certificate because chartered accountant, my colleagues, our colleagues only, many times find it very difficult to certify all these things. So best part is that my deductor complies with all the provision appropriately. So we have to educate more and more in for the better compliance. This is the file, I'll take it afterward. Basically, this is the file which talks about all rate and threshold, etc., section wise, table wise. We'll take it at the, depending upon the time. I'm not sure whether time wise how much is available to me. Another 30 minutes according to me. Okay.
30 minutes are there.
Yeah. Oh.
Yeah.
Okay. Now, some of those issues more where I want to give a little more detail. Salary, first item which I have chosen is refreshing the important aspect of TDS provision. TDS provisions in respect of salary. These are the only important point. Otherwise, every year there is a circular also, and we all know how to work out salary TDS. Primarily, the salary TDS is to be worked out on an estimated income for the entire year, and then we have to deduct equally every time, every month, whenever we make the payment. Now, equally is a point which probably or possibly sometimes it may not be feasible. For the reason there can be an increment afterward, or there can be some deduction claim afterward. Some changes can happen, but you have to reasonably try for estimating the income of the entire year. Starting from the April salary itself, we have to start deducting the TDS. The, all other provisions, if you see, the deduction liability or payment liability that occurs on the date earlier of credit or payment, whether it's a provision or actual payment, whichever is earlier. Salary TDS liability occurs only at the time of payment and not on the basis of accrual. Though he might have worked and his salary is due on the 31st of the month, or maybe the as per the terms of agreement, maybe 5th or 10th of the next month. But it is to be deducted when it is actually been paid. So it is really in proportion of actual payment. The issue can arise. One is if you talk about section 16, I'm going by the old section, equivalent we'll have to talk in the new section. Salary is taxable when due, whether paid or not. Or the salary is taxable on payment, whether due or not. So if you talk about, there is definitely a timing difference between the TDS deduction liability and the income tax liability of the salary earner. That problem will always continue. And what is to be done, that we have to see at each point of time how to save the employee from unnecessary demand. Okay. Unless the employee opt in writing, the tax will be worked out under the new regime. New regime is the basic. Now new regime has become by default everywhere. Old regime is only if you choose appropriately and file appropriate declaration. Employer can pay tax on any part of non-monetary perquisites. We all know that non-monetary perquisite can be, the tax can be borne by the employer, may not be allowable under section 37, but it is still allowed. Okay. ESOP taxation is a big issue which we have to talk about, how to work out, when to work out, valuation. Please don't forget, whenever the salary TDS you are working out, ESOP, you have to think of it. And many times the ESOP is given by the holding company outside India. So all that you do have to take into account when you are working out the salary TDS. There are strict conditions now about HRA and LTC as regard deduction of the old chapter 6A and HRA. They found, I mean, we have been hearing also a lot, the department found certain wrong claims. So was about LTC. So they have made stricter condition about the documentation, and those documentations should be with you. There are also more stricter when it is from the renting of property is from the relative. So all that we'll have to worry about when we talk about the TDS working and the exemption working of various allowances. Good part of that, now we all are aware, Bangalore, Hyderabad, Pune and Ahmedabad have been added to the list of metro cities. That was 50% versus 40%, others for 40%. If employee declares the income through any other employment or source, the employer may at his option to consider while computing the TDS amount. It is not compulsory, but employee declares, and to keep a better relationship with employee, we do have to take into account the income earned by him outside and the TDS on that amount if he claims to be. There was a condition earlier that even if employee declares other income and the TDS, the liability of the main person, main deductor payer, cannot reduce below the amount which otherwise would have been payable if he had not considered those income and TDS. Now that provision has been removed. I can give appropriate credit also of TDS, and the resultant TDS amount may be less than the TDS on the salary paid by me alone, on my own. So this is something which is also a good amendment in last 2 years. This is one slide I want to make people remember, though this is a, I would say, whether it's a good or bad step, we'll discuss on this. Under section 402, now they have provided the board may, with the previous approval of central government, issue guideline to remove any difficulty arising in giving effect to the provisions of this chapter. And such guidelines shall be binding on the income tax authorities and on the person liable to deduct, or as the case may, collect income tax, and laid before each house of parliament. This is the provision they brought actually last year, and this provision will have to be, why this is a very unique provision up till now, and because of jurisprudence, KP Varghese and Navneet Lal Javeri cases, when we are, these are the famous cases. They said the income tax circular are binding definitely on the income tax department, but need not be binding on the SSC. SSC can contest that, because that interpretation given in the circular is not really the law. And they have won also. We have won in the court also at various level. That circular, if it is in contradiction with the main provision, that is not binding on the SSC. Ultimately, the benefit was getting passed on to the SSC. Similarly, sometimes even the income tax officers tried. They said that the circular are not in accordance with the act. So we'll ignore, and they were really raising the demand on the basis of their interpretation, plain interpretation as per the act provisions given in the act. They have made, as far as if it is TDS TCS, circular is fully binding. This was more important when we talk about perquisite valuation or many other things. So they say it will be binding. These also, again, they are talking only about the TDS TCS provisions, not others. So one way TDS TCS is what? Advanced tax. So it is not a final tax, ultimate liability of tax. So effectively, it may not really affect the liability, but there can be a advanced deduction of tax if you interpret as per them. Probably you will have a grudge. If this is the additional tax deducted, my money is blocked. This is what probably can happen. This is one aspect of this circular. Second aspect is there basically the, if the benefit is not given as per the basic act, how the things should happen. Now, because TDS is an advanced tax payment, we may not really go much against that. Ultimately, we'll definitely get the credit of it. But this is against the regular jurisprudence which is established by various judgment by Supreme Court and other courts also. This is what I would say. But if I take a positive side of it, at least on this point, when we are deducting TDS, there is absolute clarity. This is what the interpretation to be done as per the circular. This is the amount of TDS. Secondly, otherwise also, whenever I advise to the deductor, when in doubt, deduct. Let the litigation go to the deductee. He may claim the amount not liable to tax or lesser amount of computation, whatever is there. Let him claim, because the benefit is also to him. If I deduct less, I have the liability of interest, I have the liability of non-deduction, I have probable disallowance of the expenses. So we should not go. So these particular aspects, otherwise also we were advising to the deductor. But deductive at that time sometimes was facing hardship. it is now, as per the law, he may have to really face that hardship. Whatever circular defines or interprets, that will be final for us for the purpose of TDS. I may contest, still continue to contest when I file the return. The deductee filing the return, he has always the right to contest. And he can say my tax liability is lesser, and he can claim the refund. Okay. One part of this also is another thing, to remove any difficulty arising in giving effect. This is also something which could be part of the litigation. Any circular prime aim should be removing the difficulty. And if it doesn't fit in removing the difficulty, there can be challenges. This is what I probably believe. But let us hope the thing goes in a good way, and TDS clarity is there. No dispute on the TDS amount to be deducted, and no issue of unnecessary disallowance of expenses. Now I'm traveling to FAQ, and this is a good practice we have seen starting whenever there was a declaration of income, all those things. The FAQs have started being published by the CBDT. This year also, and the issue is what, because we are transiting from 1961 to 2025, there can be questions. How do I write? How do I work out? How do I, for example, appeal form, which appeal form is to be used? CBDT has come out with a 96-page FAQ. I have chosen only for this presentation, I have chosen only those FAQ which are relating to TDS or TCS. And I have really reproduced and I'll read out. Many of the probable query will get really fully settled by the FAQ. There can still be an interpretation issue, but that always remains. So let me start with whatever FAQs are there relating to TDS. They are printed at question number 2 onward, 2.1 and 2.1 to 2.12, I believe. And let us talk about something we all know. There is a repetition in that, but I want to read out because this is what the CBDT really want to canvas, and we are presenting this on behalf of not only ICI, but also we are the participant is income tax. So it is my duty to reproduce this before you. So question 1, does the fundamental obligation to discharge income tax through TDS, TCS, advance tax or self-assessment tax continue under the income tax 2025? The answer in the FAQ and the factual part also, yes. The core obligation to pay income tax, whether by way of TDS or TCS or advance tax, self-assessment tax or regular assessment, continues unchanged under the Income Tax Act 2025. The new act does not modify the framework governing the manner of tax payment. It preserves the existing compliance structure while streamlining the statutory language. Question 2, 2.2, that is, have the permissible modes of tax payment been altered under the Income Tax Act 2025? The answer in the FAQ is no. The modes for remittance of taxes remain unchanged under the Income Tax Act 2025. Taxes are to be paid through authorized banking channel, including electronic payment mechanism, as may be notified by the government from time to time. Question 3. What change has been introduced in the Income Tax Act 2025 with respect to TDS provisions contained in the Income Tax Act 1961? Broadly, there is no change in the policy, but new act presents the TDS provision in a simplified and tabular manner. All the TDS sections, section 192 to 194T in the Income Tax Act 1961 are now consolidated under two sections, Section 392 and Section 393 of the Income Tax Act 2025. Section 392 of the new act lays down the provisions relating to the deduction of tax at source on payment made under the head salaries from salaries. Section 393, on the other hand, provides for deduction of tax at source on other types of payments, such as commission, brokerage, rent, payment, or on transfer of certain immovable property other than agricultural land and other specified payments. Section 393 of the new Act contains three tables applicable to three broad categories of payees: resident, non-resident, and any person. The respective table for each category in turn specifies the nature of income or some monetary threshold, payer person, and the applicable rate of TDS. The rates of TDS, TCS, as well as thresholds are largely the same, I repeat, as in new Act with that of old Act. For exact TDS, TCS rates, reference may be made to the relevant provisions of new Act and the Finance Act as applicable. Question 2.4. Which act will govern the TDS application during the transit period? A very important, and we wanted a clarification. TDS obligations shall continue to be governed by the act applicable to the financial year in which the sum is paid or credited. Accordingly, any sum paid or credited on or before 31st March 2026 shall be governed by the provisions of Income Tax Act 1961. Further, any sum paid or credited on or after 1st April 2026 shall be governed by the corresponding withholding provision of the Income Tax Act 2025. Having answered this 2.4, I have one doubt in my mind. Whatever the salary, which is there where the tax is worked out on the basis of what is likely to be paid, but actual payment takes place after the year. Probably we'll have to really think of it, but this can be the main answer has already come in this FAQ. 2.5. Which section should be quoted for TDS TCS made after 1st April 26? For the transactions entered into on or after 1st April 2026, deductors, collectors must quote the relevant table item of section 393 or section 394 for TCS of the Income Tax Act 2025, quoting all section numbers such as 194C, 194J, or 194H of the Income Tax Act 1961 for such transaction may result in the system level validation error. They want you to be very, very clear about it. Do not put the old section and do put the correct table serial number. Example they have given in the FAQ: for XYZ Industries makes a payment to a contractor on 5th April 26. While filing the TDS return for Q1 of tax year 26-27, the firm must quote section 393(1), table serial number 6.1 of the new Act and not section 194C of the old Act. Okay, considering this FAQ, I am really worried about the adjustment. Though it is in the same quarterly return, the adjustment of tax paid under one table, whether it will be allowed for adjustment against, shortfall in one and the excess in another, we'll have to really think, but try to avoid that issue as far as possible, because this kind of thing unnecessarily increases the litigation, if not litigation, at least the correspondence. How is TDS determined for contracts or services spanning over the period of March-April 2026? Another very important question and a very important clarification. Similar to the provision under the Repealed Income Tax Act 1961, TDS applicability in Income Tax 2025 also depends on the mechanism of event earlier of credit or payment. If earlier event of credit or payment lies on or before 31st March 26, TDS provision under the Income Tax Act 1961 will apply. If the earlier event of credit or payment lies on or after 1st April 2026, TDS provisions under section 393 of Income Tax will apply. Now think of one where we are directly connected. The provision of audit fee. Naturally, that will definitely go as under the 1961 Act. I'm talking about provision of audit fee for the year 25-26 as provision or payment, whichever is earlier, that will happen 31st March 26. The old law will apply. A similar thing which we have to understand wherever whichever the date of liability of TDS, the time for liability to deduct TDS is depending upon the earlier event, earlier of credit or payment. And that is the point of time which act was applicable. Up before March 61, after March 25, 2025. They have explained this in a tabular. This is part of the FAQ, but this is what we have, whatever is given at the table is an explanation of what they wrote earlier. So I will not talk much on the table, but it means the same thing. Question 2.7. What is the due date for depositing the TDS to government account and whether there is any change regarding these timelines in the Income Tax Act 2025? Under the Income Tax Act 1961, the TDS must in general be deposited to the credit of central government within the 7th of the month following the month of deduction. Exception to this general rule are TDS deducted in the month of March, where the due date is 30th April for non-government deductor. TDS under Section 194 IA, IB, 194 AM, and 194 S of the old Act. Challan cum statement cases relating to purchase of immovable property, rent by specified individuals or HUF, payment to contractors professional by individuals and HUF, and the transfer of virtual digital asset where due date is 30 days from the end of the month in which the tax is deducted. Under the Income Tax Act 2025, the due date of payment to the government account continues to be prescribed by rule. The Income Tax Rule 2026, now Rule 218, corresponding to Rule 30 of the old rules, retain the same timeline without any policy change. Really speaking, what I would repeat many times, I would like to repeat, there is really no change, except we have to remember the new name, new forms, new section, new subsection, that's all. Question 2.8. What is the due date for depositing tax deducted at source in the month of March 26? Question is simple. The answer is yes. Similarly simple. Tax deducted in the month of March 26 is required to be deposited in the government account by 30th April 2026 by non-government deductors. In case of government deductors depositing TDS by way of challan, the due date will be 7th April 2026. In case of any default, interest and penalty action may be attracted. For TDS to be deposited after 1st April 2026 on a sum paid or credited before 31/3/26, should the challan be of 1961 Act or 2025. The governing principle is that the TDS deduction and deposit are linked to the date of deduction of tax at source. Since TDS obligation crystallizes on date of payment of credit to the payee, the old challan will be applicable if the payment credit to the payee has been done on or before 31/3/26. Thus, if tax is deducted under the 1961 Act prior to the transition date, deposit obligation will continue under the 1961 Act. Thus, existing challan and the payment codes linked to the Income Tax Act 61 will continue for depositing the tax deducted before 1/4/26. Really, before this question, we have gone for that the screenshot of various payment screens. And you find the thing is very easier, even if this FAQ is not there itself it talks about whether 1961 Act, and then it will take out the appropriate challan for under 1961 Act or appropriate challan under the 2025. Question 2.10. If tax has already been deducted at source prior to 1st April 26, at the time of credit to the payee's account, is there any requirement to deduct tax again upon actual payment made on or after 1st April 2026? Question included in FAQ. Answer, we all know. No, in such situation, once the tax has been deducted under the Income Tax Act 1961, on the date of credit of a sum in the account of payee, no further deduction is required on payment of the same under the Income Tax Act 2025. Question 211. Where tax has been deducted under the Income Tax Act 1961 pursuant to a lower withholding certificate valid up to 31st March 2026, will such deduction remain legally valid if the corresponding tax is remitted to the government after 1st April 2026? Yes, the answer is yes, obviously. Where the event of payment of credit occurs on or before 31st March 26, TDS compliance, including deduction of tax at lower rate specified in the certificate valid up to 31st March 2026, shall continue to be governed by the Income Tax Act 1961, even if such tax is deposited with the government treasury after 31st March 2026. The provisions of Income Tax Act 1961, along with the lower withholding tax certificate issued thereunder, shall continue to apply. Will a lower nil withholding certificate issued under Section 197 of the old Act remain valid for payment credits made on or after 1st April 2023? The answer, which is good. I would love to have that answer. The answer is yes. A certificate issued under Section 197 of the Income Tax Act 1961 shall remain valid for payment credit made on or after 1st April 2026, provided that it is issued for lower nil deduction of tax in respect of projected receivable for the tax year 26-27. If I had already included the probable contract receipt, probably I might get in 26-27 tax year that money. And the certificate included instead of 2% or 1%, TDS to be made on the contract. That will continue. That's what they say. This is a good clarification. This will help many of us. So we need not have to worry about. I think these were the 12, question 13, the last one. Is there any change in the rate of interest for delayed deposit of TDS TCS? No, the interest rates applicable for defaults in the deducting or depositing TDS TCS remain unchanged for those prescribed under the old Act. In accordance with Section 398(3)(a) of the Income Tax Act 2025, interest is calculated as follows. Failure, interest at 1%. Failure to deposit after deducting, interest at 1.5%, which they have explained in the table, which is also part of the FAQ. The thing is same, ITA 1961. Failure to deduct, 1%. After deducting, failure to pay deposit, 1.5% per annum, or a part thereof. This before I go to this I want to discuss more, because these are applicable, going to be continuously applicable for tax year 26-27. So I thought of bringing this, and I believe the table which I am talking about, I can pass on to that, because the table of tax and the threshold, etc., is available in any publication, including any reckoner, or even go on online. What is the rate of TDS on a particular characterized income, and what is the threshold? So the reading out itself will take about 20-25 minutes. We have so many sections under TDS, subsections under TDS and TCS. I would love to skip. I just show you just as a part of what that statement look, and then I would like to go on this other one. Yes. It might disturb my sharing. So let me continue what I'm continuing. That table I'm not opening up on the screen one. Okay. Is this again? I'm back on my. Anybody who can tell me I'm back on my original presentation?
Yes, sir.
Is it being said? So I'll
Yes.
continue here, because that probably will disturb my sharing of file. Okay. So let me go why I have included this certain important judicial pronouncement here. So they are really important when I'm deducting tax. They were equally important earlier year also, but I want to refresh that for nobody should make a mistake on this particular while making the deduction of tax. The first judgment which I am talking about, Engineering Analysis Center, we have been using time and again for any payment in foreign currency and saying that software is not liable for TDS. The judgment is not like that. The judgment is in the specific situation. Two things were very important in that judgment. So let me read out what I want to point out on that. By the way, time-wise, Is the time over? Committee, is the time over?
Sir, we can continue for 5-7 minutes and then we'll
Okay,
take a
okay.
Q&A.
Then I'll take one thing. I'll not go for the entire aspect of the schedule, but engineering analysis was given primary on two basic issues, DTA and end user license. In that situation, they said that software is not liable for TDS. And if your case doesn't fall in that situation, don't take it granted that software is always not liable for TDS. There can be an issue for you. And this is what I wanted to remind. Okay. Then I want to remind of the Tiger Global, a very recent judgment by Supreme Court. This is something where we have to worry about the TRC certificate. There was a valid Mauritius TRC with Tiger Global. They were pulling vehicle for 500 investors from 30 different countries. Three directors were from Mauritius, one from USA. Authority to invest was USA. Also, grandfathering was also basically provided in the DTA between Mauritius and India. Decision. TRC is not conclusive evidence for which DTA is to be applied. And this is something which, when the first time the judgment was published, we had discussion, a lot discussion on this point. If TRC is not applicable as a final evidence for application of DTA, can I give any 15 CB? Because the 15 CB primary, I want to give the benefit of DTA, and the primary evidence which I am using is the TRC certificate. And if that is not the final, but then we came to a conclusion that though TRC in that context, we do not have the authority, what the department had the authority to go into the detail. Why they went into the detail in Tiger Global after getting all the data, that department is only capable. If you want 15 CSCB to continue, new form 145, 146 to continue, you will have to give a liberty to the chartered accountant to use TRC and the no P certificate and probably the beneficial owner certificate. Continue to allow them to use. And if you say TRC is not usable, then the 15 CA is to be, CB is to be scrapped totally. Let us talk about why Tiger Global. They said head and brain is in USA, so Mauritius should not apply. Substance or form is conclusive. Issue of interpretation, whether it is an investment or arrangement. There was an issue, the grandfathering is given for the investment and not for the arrangement. Even if GAR is not applicable, JAR is applicable. GAR, JAR and SAR, I'll enlarge the thing. GAR is a general anti-avoidance. JAR is a judicial anti-avoidance rule. And we have SAR, special anti-avoidance rule, which are there in the Act itself. Okay. So I wanted to discuss this, but then there is no time. So whether certificate in Form 145 can be issued by CA. For Form 145 is still not available in income tax. That was when I prepared the slide, but it is now available. Point basically is that if you scheme 145, you want me to continue, then I'll have to rely on TRC as a primary evidence, unless you have a definite in disagreement with the TRC certificate or an OPE certificate. I had an issue with an OPE certificate where I know the person in front of me has an establishment in India and still is giving no PE certificate. I should refuse if I don't want to take the risk. And the best part is that whenever in doubt, better you ask him to apply to the income tax authority for no TDS or no TDS certificate. Salary TDS was a professional TDS. There is a habit of people not to take on payroll a person who is really equivalent to an employee. And another advantage to the employee is also there. If it is taken as a professional fee, straight 50% reduction under 44 ADA. So here there is a judgment in Balabhai Nanavati Hospital. They allowed, but in the situation where it was not a fixed sum. Now, many times I find particularly people who are exposed to the educational institute, agent faculties, who take the money, all other terms of the appointment is really like an salaried employee, and they take the salary in the form of professional fee. That area probably will have to worry about. Balabai Nanavati judgment long back was in the situation where there was no fixed amount and there was nothing like a contract like an employee-employer existed. That the doctors were taking practically monthly payment based on the work done by them on a day-to-day basis. MFN clause, this is more again for the payment to foreign non-resident other thing. MFN was a clause where if OECD country, this clause was more applicable. If I have made an agreement with another OECD country for a beneficial TDS, it was automatically applicable to the existing other members. Example, if I have to, I was talking about a 10% TDS or dividend, and I arrive at an agreement for 5% TDS with another OECD country. I said, even you don't change the agreement, the 10% will become 5%. DTA may not be changed. But unfortunately, the Supreme Court said no. This is more because they also made a legal comment that every such change, MFN clause to be applied, every change has to be notified. And in a case before them, the notification was not there. And generally, most of the country, the Indian government has not notified those automatic MFN clause benefit. These were the cases which I just wanted to talk. I think by time limit, I have finished. I have already, the table, I have already passed on to the, I'll now these slides I'll go with, so I'll just show a look of the table, what I have done, and then I, uh, I'm able to share. This is the kind of the table. Is it viewable?
Yes, sir.
Is it viewable?
Yes, sir. It is visible.
It's the
Yes.
table which contains each, how that, what threshold or what is the rate of tax, each section or subsection wise or each table entry wise. This I have already passed on. To read out this will take unnecessarily 20-25 minutes. And the table is available practically in public domain anywhere and everywhere. So I am skipping that considering the time, because there is also some time I have to keep for the question answer, correct?
Yes, sir.
Okay. So
Yes, sir.
I have done with my presentation.
So thank you so much, sir, for such an
Thank you.
excellent and
Thanks a lot.
insightful session. And it was indeed a very practical session, I would say, going into various nitty-gritties of the TDS and TCS provisions. It's indeed helpful to all of us to understand more about the tax compliances for the tax year 26-27 in terms of new Income Tax Act. So we'll just take a few questions which are there. So I'll just go one by one and then we'll see.
Sure.
So the first question is that whether there are any specific TDS rules have been specified for charitable or religious trust as a deductor or as a deductee. So is there any
There
specific
is
mention?
no, I have not come across anything. The all provision, I mean, they are more, even if their income is, they have to go for getting the lower TDS certificate or a nil TDS certificate and submit to the deductor. And so they, as far as their own liability of deducting tax, there is no different provisions at all.
Absolutely. Yes. So other question was whether the provisions or the circulars pertaining to Section 194N in the old Act, in 1961 Act, whether those circulars are still valid as far as 2025 Act is concerned.
As far as up to what I interpret is that till March, if the deduction is in respect to up to March 26, old circular will prevail for the old provisions surely. Now, the crux of that certificate, basically, if they do not again repeat, one can probably argue, but I don't find a reason that they will not make it applicable to 2025. And now they have got a legal force for that circular, which will be binding on both SSU also, which was otherwise not.
Right, right. So another question is whether the unused challan balances for the challans paid in FY 25-26 will be applicable or can be used in tax year 26-27. And if not, then how to means whether we should apply for the refund or what is the course of action that needs to be taken.
It's a question of opinion, basically. It's not directly a provision from the text. To my mind, better apply for the refund only. Because one is even getting the challan credit for the another assessment year. I have seen personally the process. It was clumsy and many times our people had to go around to get the credit. So really that credit transfer sometimes is easily given because that was practically done by the inspector level rather than the higher level. But then I would say basically better go for the refund. Legally, I would say better go for the refund.
So one specific query is in terms of rent paid. The rent paid per month is 45,000 only. But if we are cumulatively paying rupees 90,000 for 2 months together, whether the TDS is required to be deducted.
If the same payee, I would advise them to deduct if the same payee is there. Because payment to same person, it is not property wise, it is not defined. It is the rent per month they have defined. And the pay is same, I'll totally deduct.
Right, right.
At the same time, if I expand the answer, if there are two joint owners of that flat and I'm paying 60,000, I will interpret I'm not liable 30,000 I'm paying to each other.
Right. True. There is one query regarding Form 145 that it's earlier Form 15. In that, the member is asking if the payment is made to the parties who are in the Middle East countries and the payment is covered by Form 145 Part D, then the tax identification number becomes mandatory. But there is no tax identification number to the payees. Then, in such situation, what TIN is to be filled in such cases? So this
Yes,
is more in terms
those
of
countries where there is no TIN number or tax identification number,
correct,
definitely we'll have an issue and they have to come out with the clarification. But now they have talked about the TIN number is essential. Now it will
right,
become mandatory.
correct.
TIN is basically what a pain of that country, I would say.
Mhm,
Or
mhm,
some other way, whenever the last probable resort which we take is that if the copy of the return with any reference number is given, we take it as a TIN number to give that in the required format. But yes, there are countries where TIN number is not possible, or country where he is not filing the return, no necessity to file the return.
mhm.
Then there may be an issue. There is no TIN number, and that will definitely trouble us. They have to come with a clarification.
Right. Definitely, sir. One query is the advertising is defined as professional services under Section 402, subsection 28, whereas it is also covered under Section 402-47. Which is the definition of work? Hence, the TDS is required to be deducted as a professional charge or as a contract.
Is a professional charge or is a
As a contract, as a contractual
as a
obligation.
one? Okay. Uh,
0000.
acha,
can try putting 00.
acha, my team says earlier question. So before that they answered. My team
Uh-huh.
says put 0000 in the TIN number, and
Okay.
probably you are able to come out of the thing. This is what practically my team works on.
Okay. For the earlier question you are referring to, sir.
Now that is earlier question. Now your
Yes.
next
Okay.
question about advertisement.
Right.
I would basically there also if you see the class contract for advertisement is one and the advertisement advising, professional advice is one. So that both of them are different aspect. The one is you give a contract to put the advertisement in the newspaper or other thing. I would say it is under the contract. Okay.
Right.
Another is that when the people give them, I mean, their photograph or they allow their name to be used in the advertisement. So
Right.
then it will go in the professional charge.
Right. Right. Now, one question is regarding the practical problems faced while making the payment of TDS on salary. Let's suppose the salary is paid to the non-resident in FY 26-27, that is the tax year 26-27, and whether the status is to be considered as a resident or non-resident. Then in that situation, in the drop down list, it is not showing the salary as a head of income. Then how to resolve this issue? So probably I think the question is not so clear, but what I could understand from this query is that in the drop down list for while making the payment of TDS as a non-resident salary, then which section is to be put as a head of income, since salary head is not coming in that particular like
They've
as
said in 144, so they've said it is linked to 144 form for salary to non-resident, and the code used is you use from there for what you use in 144.
right,
Form
right,
144 is talking. See, there is third list, which is a common list. We have one list only payment to resident, another list we have payment to non-resident, and third is other persons.
correct,
And
correct,
basically, this will go practically in other person category. Although what the tax is to be deducted under 392 and not 393, and that code you'll have to go for that code.
correct, correct. Right. One practical challenge again, which is coming up on deduction of TDS under 194 IA, is that the date of agreement is 26 March 26, but the date of registration is 8 April 26. Then in which FY the TDS is to be deducted, means under the old law of 1961 or under the new law of 2025?
As per agreement is what you said, but if
26
it
March, the date of agreement is 26 March, but the date of
hmm,
registration is 8 April.
if the registration is within the time allowed for registration, then the contract dates back to the date of execution of contract. If
Right.
it is registration is beyond the time allowed for registration, then it will be on the basis of this is what my interpretation would be. So if it is within the time allowed, I think the rental agreement in Maharashtra, we have a time of 1 month or some 15 days or 1 month to register. If you
Okay.
register in time, then it should go back to the date of execution.
Right, right, right. Great. So I see if there are any more questions. Uh, sir, more questions are in terms of the questions we have already covered. I'll just check whether there are any. Yes. Yes. One question is relating to the TDS on partners remuneration. Since the books of accounts and the deduct are getting finalized, and the remuneration is also getting finalized on 31st March. So, what about the deduction of TDS under 194T? So, how to solve this particular problem?
The remuneration, the TDS is on the payment basis, na? The partner, whatever payment I make. And
Fine.
ultimately, this is to be adjusted in my personal return against the whatever profit is taxable, rather the interest and remuneration, wherever, because this otherwise this 10% which I'm withdrawing is really not my liability. Leaving remuneration interest, the tax is to be paid by the firm. So that part of income becomes tax free in my hand. I am going to adjust primarily against the remuneration and which is taxable in the return for that particular year. So whatever is deducted there, I should, because now that will be naturally on the basically I'll have to get the credit on the basis of actual payment date.
Right, right, right. Yeah. One practical question again. In section 393.1, that is serial number 82, the wording of the section is any buyer. However, there is no mention of turnover exceeding 10 crore, which was there in section 194Q. So how to interpret this particular section?
1 minute. Let me read that.
Yes, so section 393(1), serial number 8, Roman 2.
I'll just open.
Yes, sir. Yes, sir.
Table, which table you are referring to?
Serial number 8, Roman 2, sir.
Okay. Missing that. Really missing out the Roman 8. I'm not getting, I'll write down, I'll pass on the answer to. I'm not getting even that 8
Yes,
directly
yes, sir.
reporting
Yes,
my
sir. Yes, sir.
income
We'll
tax
park
act.
this issue. Yes, sir. We'll park this issue and we'll update accordingly. So let me see if there are any more questions. So, 26, it's okay.
Yes. Pranav, you have switched off?
No, I'm just reading the questions. If there are any more questions which are appearing, I'm
Okay.
just finding it out. Just 1 second. Yes. Interpretation. This is fine. Yes, we have covered this. We have covered this also. Yes, I think we have covered almost all the questions.
Okay, this one question will keep in mind because I'm not getting Roman 8 directly in the table.
Yes,
Okay.
sir. Yes, yes, sir.
No
And
issue.
one last question, which has appeared,
Hmm.
which is read as uh, uh, so, the assessee requests to obtain Form 15CB from a CA. There are certain expenses which are not taxable in India. As such, there is no tax liability. And the company has not provided tax residency certificate and Form 10F, stating the income is not taxable. Uh, so whether still the 15CB certificate is required, and if so, can we mention the TRC and 10F are not provided by the client? So can we put such a remark in Form 15
If
CB, like
the
Form
do,
51.6 currently?
first is domestic law doesn't take it. So TRC and other things are definitely out. 15 CA was always required because there is an intimation by the payer.
Yeah,
15
right.
CB comes in the picture only if he asks, but he should not ask because there 15 CB the purpose is to give the rate of TDS based on the lower of the two, DTA
Right.
versus the domestic law.
Right. Okay, that is true. And yes. I think so. Almost all the questions which are visible here, we have tried to cover. But if there are any questions which have remained unanswered, I'll just note it
I
down,
mean,
and probably we can answer it later on if any of the
sure.
questions
Then,
are being missed.
yeah.
So
Put me that question on mail, including that particular which I could not
okay,
immediately lay my hands. So give me,
absolutely,
and we'll definitely answer in a day or two.
sure, 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 sure.
Sure.
No problem.
So,
Yes.
thank you so much.
Thank you so much, sir, for the excellent session. It's a very insightful session, I must say, that which has given us more insight and the practical knowledge about the latest 2025 Income Tax Act. So I would like to thank the Direct Tax Committee, Chandrasekhar Chitle sir, Vice Chairman Pankaj Shah sir, uh, Sharad Shah sir, the eminent faculty, all the participants and the office team. To give me the opportunity to moderate this particular session. And I would like to once again thank the Direct Tax Committee as well as Sharad Shah sir for such excellent session. So thank you so much, sir,
Thank you
for
so
the.
much. With your permission, I leave.
Yes, sir. The office
Okay.
team is. Should we close the session?
Anybody?
So,
I see from office who is there.
yes, sir. Can we take one last question, which has appeared?
Yes. Okay.
Yes. So the question is a person required to file Form 15 CA when he remits an amount below 10 lakhs as gift to his son, who is a NRI residing in USA? So the question is whether 15 CA is required if the remittance is below 10 lakhs as a gift to his son, who is an NRI residing in USA.
To my mind, any payment to non-resident, 15 CA is required, even 15 CB generally we advise to take. It is an exempt income being a son. 56, I'm going by the old section. Section 56 exempts a gift to the relative. So better we give a zero certificate because it is not taxable under the domestic law, and we go ahead with more the issue is more the FEMA compliance than income tax compliance. Okay, but we should give, to my mind, because all foreign payments, and really, but for the relative, the gift is now taxable item.
Yes, sir. Yes.
Okay,
So thank you so much, sir.
thank you.
Thank you. Thank you so
Okay,
much.
take, bye, bye, bye.